Okay, so got a very special guest today, Mr. Samir Rachh. He is a fund manager with Nippon Life India Asset Management. So again, a brief introduction about him. He is a Bachelor of Commerce from Mumbai University. He has a total experience of over 30 years, 3 decades in the asset management. He has been associated with Nippon Life India Asset Management since 2007 as an analyst and then fund manager for over 15 years. He specializes in mid and small cap stocks. So welcome, Samir. Welcome onto the stage.
It's my pleasure.
Yes, Samir. Nice to see you.
Hmm.
Can you hear my voice?
I can hear you. Perfect.
Oh, and wonderful, wonderful. Samir, you have got such a wonderful 3 decades of experience in the stock market, and most of the time you have been, into the fund management. So again, many things that people are asking right now about is the market situation. We have got so many things going on, geopolitics, economy, and all these things. So before I get into the main topic, how do you think the market is poised at this point of time? Can we see that 2023 a kind of repetition of 2021, 2021 kind of a move that we can see, or it's going to be like 2022?
No, so each year is a different year, kind of. So I think 2023, in that sense, is very interestingly poised because
Right.
we have a good amount of time in price correction, at least in the small cap, kind of. So basically, markets are not heavy, kind of. So
Mhm.
in terms of valuation, what I would say, markets are at a level at which you cannot call it very cheap, or neither you can call it very expensive. So they are in the right zone. So I think the question to be answered is, now everything depends on how economy is going to shape up. So if economy does well, and if earnings improve, I think markets valuations are not expensive, so markets could do well, kind of. And internally, we feel that Indian economy is on the verge of picking up, and
Mhm.
that makes us reasonably optimistic on overall market scenario. So, but I think like that year post COVID was an exceptionally good year. So don't expect kind of those kind of years to repeat very often. They
Right.
repeat, at some good interval, not every year.
Okay, great. Absolutely what taken. Now, okay. So one of the best way to invest, and today's topic is of course small cap investing. And when it comes to small cap investing, directly buying small cap stocks from the market could be pretty risky. So the best way is of course through mutual fund, right? We have heard about large cap, we have heard about mid cap, multi cap, flexi cap. So what are the pros and cons? What are the what are the characteristics of a small cap fund? If you can just give us a brief about in terms of risk return perspective.
Right. So see, first of all, now we have very clear definition of what is large cap, what is mid cap, and small cap. So first 100
Correct.
companies are market cap are large cap, next 150 companies are market cap or mid cap, and rest all are small cap.
Mhm.
So small cap starts all the way from market cap of 15, 16,000 crore. And even if you have cut off of 1,000 crore, there are more than like close to 800 companies in that. So it's a very large universe to start from. Kind of. So
Exactly.
that's the one thing. So basically, and secondly, small cap is, I think, very research intensive category because it's a very risky category in the sense
Mhm.
that, see, normally, if you want to buy any large cap or mid caps, you will have so many brokerages covering it. So there's huge amount of sell side research available, and there's so many analysts covering. Whereas in case of small cap, there are cases where it may not be covered by any analyst or any sell side, and overall coverage will be limited. So, and plus, I think research is very important because in small cap, liquidity tends to be poor. So in
Mhm.
large cap, after you bought, you realize that you made mistake, you can sell at some price. Whereas in small cap, once you bought the stock and then you realize that you made mistake, expect that you will lose minimum 50%. So entire game is in your hand before you buy the stock, and that's why research
Right.
is most important. So I think research is one of the most important thing in this category, and I think individual investors, if they're not full-time investors, they may not get that kind of time to, and they may not have that kind of resources to do. So I think this is one of the perfect category of for investing through mutual fund, kind of. But small cap can be very volatile. So especially when something is going wrong in the world, like So we saw at the time of COVID, what happens. So tomorrow there is some unforeseen event, then just expect that small cap will collapse first. They can be and volumes will dry. So this is in that sense very volatile, very very risky category. And I think this volatility makes it perfect category for investing through SIP route. Kind of. So
Wonderful.
that's so to summarize, this is a very research intensive category, which makes it perfect category for investing in through mutual fund. This could be a very volatile category. Again, that makes it a very good category for investing through SIP route. So this is what I want to just summarize.
Absolutely. Absolutely. So there's a little bit of warning also who is investing in the small cap, stocks, that there are not much research is being done. It's very wide. So many stocks are there, and the volatility. It could be very, very widely volatile. So now, considering the volatility aspect, considering the risk associated with small cap investing, so do you think all the investors should invest in small cap? Because again, from the return perspective, also it tend to give high return. I don't know much about. I'm going to ask you. So from the return perspective, how much return can you expect? Is it more than the big large cap or a mid cap? Number one, and number two is like, is it for all investors? You said that SIP mode is the base mode, but is it for all kind of risk profile investors, the small cap investors?
Right. So basically, as you say, I think it's not either or all. So if you want to invest in like Indian market, so it's not that you have to choose between whether you want to be large cap investor or you want to be mid cap investor or you want to be small cap investor. So I think the right
Right.
kind of allocation across the category is very important thing. So if you look at small cap as a category, it's roughly about 15 to 16% of the market cap. So
Mhm.
since this is a category which could be under research, right, at the time. So basically, the chances of you finding, some multi-baggers are very high because, this is a category where, like you can have tomorrow's multi-bagger. This is again a category which is under research. So you can find stock which is completely undiscovered, which turns out to be like tomorrow's winner. Yeah.
Gems.
Yeah, tomorrow's gem. So this is also a category, which could have tomorrow's winner. And all new sectors, they start small first, like, and they over a period of time they become like mid cap, large cap. So since I have spent more than 30 years in the market, I still remember in India when there were only PSU banks, and for the first time, RBI started giving private sector licenses and all. In those days, HDFC Bank had come out with that IPO. So HDFC Bank was small cap in those days, and from small cap today is one of India's largest bank.
Correct.
Similarly, Infosys, when it came out with the IPO, many people may not know that Infosys IPO was undersubscribed. And from small cap today, it's again India's premier large cap company. So this is a space which has like tomorrow's large cap which are there. So I think this is a space which should not be ignored. Of course, this is a riskier category. So you have to be conscious of allocation which you want to make to this category, kind of. So if you are conscious of what kind of risk you are taking, then this is a category which should not be like completely ignored, kind of. So that's bottom line.
So we need to have some kind of exposures to the small cap. We cannot ignore it because they
Right.
have the potential to give you exceptional return if you can,
Absolutely.
choose the stocks properly. Okay.
Absolutely. So
So
only, yeah.
now, go
Yeah,
ahead, go
please.
ahead.
No, no.
Yeah.
So what I was saying is that basically how much allocation you make to this category will depend on your risk profile and the time of the
Correct.
market. So however bullish you are on this category, never
Mhm.
invest 100% of your money in the small cap because this could be very risky at the times.
Absolutely. And again, as you said, it's very, very risky. And many a times, when you look at different social media and all this kind of things, you are likely to get lots of kind of tips or something, probably, right? And people tend to blindly follow and buy those stocks. And it mostly comes in the small cap sectors, right? Small cap companies. So now, again, the next question is, if I want to really get exposure to the small cap, so instead of choosing exclusively a small cap fund, can I go to a flexi cap or multi cap kind of a fund which gives me some kind of exposure to small cap sectors? Or which one do you think is better? Exclusive small cap is better or multi
No,
flexi
so
is
basically,
better?
see, as a manufacturer, it's our job to give choice to the customer. So if
Right.
somebody, so basically either you can do your allocation between large cap, mid cap, and small cap. So even as an investor, even if you don't want to do that, then we have another option where flex equip category, where fund manager will decide at that point of time how much he wants to have in mid cap, how much he wants to have in large cap, how much he wants to have in small cap. So basically, you see, as a manufacturer, it is our job to offer all kind of choices to investors. So it's just depends on one's like appetite or what kind of time one which has or one of the passion which has for doing this. So I think both options are good. Like
Mhm.
it's just a individual choice.
Okay. In fact, I would like to request all of viewers also, if you have got any questions in your mind, um, please feel free, go ahead, type in your chat box, and Samir would like to answer those questions very, very happily. Right. Again, coming to one of the very important decision making points. Now, of course, there are so many questions are coming in my mind. Number one is that yes, we have seen we have seen the small cap sectors indices, they have fallen, corrected a lot, but of late we can see some kind of a recovery. And like when we see a small cap rally, the rally is breakneck kind of a rally, huge rally. So when do you think, how long do you think this next rally could come in the small cap segment? Maybe next year, 1 year, 2 year, 3 years. What's your
No, I
request?
wish I knew answer to those questions. So see again, see I think one very important peculiar thing about small cap investing is that you have to necessarily take a long term view. So this is not a
Yes.
category where one can trade and get in and get out. So you see small cap. I think the biggest the peculiarity of small cap is that small cap are illiquid, right? So small cap
Mhm.
stocks are illiquid, and there is a huge amount of impact cost. So you
Mhm.
cannot really do frequent buying and selling in small cap. So you cannot take view what is going to happen next quarter and take position and again after one quarter if it goes up just sell. So you have to take a long term view. If you want to really experience beauty of investing in small cap,
Mhm.
take a long term view. So we
Correct.
always tell investors that this is a category for a long term investor. So if you want to experience the real beauty of this category, come with at least 7 8 year view. So I think that's
Okay.
a prerequisite. Like if you want to really
Very
experience
important.
the beauty of small cap investing, take a long term view because you
Mhm.
cannot do frequent changes of the portfolio and you have to give it a time, kind of.
Mhm.
So that's very important. So basically, see, I mean, many time, I mean, we don't actually bother about what's going to happen next month or what's going to happen next quarter. We take a long term view and then we try and buy good companies, good businesses, and then we try and give it a time. So
Mhm.
sometimes it may do well in the short term, like sometimes it may not do well in the short term. But if you bought good businesses, good management at a reasonable price, the chances are very, very high that it will do much better over a longer period of time.
Correct. Now, there are two things. There are two questions. First is, like, as a fund manager, when you choose, identify a company in a small cap, these are the companies. How do you choose that companies? What are the parameters? What are the different things that you finally shortlist? Because there are thousands of companies are there, and you need to select only few one. So, how do you choose those companies?
Right. So basically, I think we try and keep it very simple. So
Yeah,
as I said, I know this is a game of long-term investing, kind of.
correct.
So like in any long-term association, like if you want to get into any long-term association, you have to be very comfortable with the other person. So I think the quality of promoter, quality of top management is our number one priority because
Correct.
we just want to ensure that we are getting associated with the right kind of management, with the right kind of people. That's number one. The second thing is that even if the person is right, but the underlying business is not good, then it doesn't work. So second most important thing is the quality of business. So that business should be like having like long way of growth. It should be business which should be generating free cash. This is a
Hmm.
business which has moat, kind of. And I think third most important thing is that you have to buy them at a reasonable price. Even if you buy a good company, good promoter, but at expensive price, it doesn't make money. So I think it's a combination of these three things which we try, kind of. This is very, very fundamental to our investing, kind of. So basically, so as I told you, this is a category which is very research intensive category. So you have to
Hmm.
actually, whenever you want to assess any management, you just can't assess a management sitting in the office, looking at a balance sheet, looking at the data.
Exactly.
You have to go on the ground. So you have
Hmm.
to understand, how that particular management is dealing with his employees, how that particular management is dealing with his suppliers, how that particular management dealing with the customer. So you have to get a lot of such softer feedbacks, which
Mhm.
gives you confidence that whether it's
Correct.
good or it's ordinary, kind of. And most of the time, like a quality of one person or any management is tested during the bad times. So in good time, everything is good. But I think the
Mhm.
most important thing is that when stock prices are falling and company which you bought falls down by 50%, so that really tests your conviction. When you bought some stock and it falls down by 50%, you have to take call whether you have made any mistake in assessing it, or it's just because the markets are bad, kind of. So you get that kind of confidence by doing all this software research. So basically, you shouldn't lose your confidence just because prices are coming down. So all this software research which you do, becomes really helpful in keeping the norm. So in small cap, the entire game is like how do you behave when chips are down. So the most beautiful like opportunities of investing in smaller cap stocks comes when there's a blood on the street. When stocks prices
Yeah.
are like selling at a discount. If you lose your now at the time, kind of, then you can never make money. So that confidence can come only through this, so a lot of software aspects that like you're very confident there's a good company, there's a good business. Just because stock markets are falling, it's available at discount, so it gives you that ability and confidence to hold some businesses for a longer period of time. So I think this ground level checks are also a very important part of a feedback. Apart from that, we run a lot of like so basically, see, we have to keep on finding the stocks. So so we have to get the leads, kind of. So we get leads from a lot of screeners, we get lead from a lot of news flows, we get leads from a lot
Mhm.
of analyst talk. So whenever we go to meet one company, we ask them about which are the other companies they respect in the sector and all. So we try and generate a lot of leads like that, and then basically we ask our team to work on those leads and develop, and then finally we do our work, and finally we zero in on this is a stock which we want to buy, kind of. But in small cap, very interesting. Like, see, you've done all
Mhm.
the work. Like, you got a lead, you develop that lead, you met the management, you made all did all channel checks, and finally you zero in on that. This is a company which you want to buy. So then you call your dealing team and say, I want to
Uh-huh.
buy 50 crore worth of that stock or 100 crore worth of stock. But they say there is no seller today. Today, in one day you can get only 1 crore worth of stock. So what do you do? So
Mhm.
your work doesn't go waste. You have to wait patiently. It's like market may give you opportunity someday. And that's why I always tell, to buy one small cap company, you have to do research on five small cap companies. Because it's not necessary that if you like one company, you will necessarily able to buy that, the quantity which you want, kind of. So you have to patiently wait if some opportunity comes, if somebody is having redemption, or some funds, like life is getting over and it wants to sell, or there is some HNI which is in need of money, or somebody is panicking just because markets are down. So you have to wait patiently till you get those kind of opportunities. So it's very interesting in that sense.
So I would like to tell the viewers that kind of discussions, what Mr. Samir is telling, it's really a fun manager how he thinks about a stock, how he buying his stocks, and so if you have got questions, please feel free, ask the questions, and we'll be happy for that. Now, Samir, we are talking about buying a stock. Of course, as you said, the best time to buy a stock is when there's a blood on the street. You need to have the courage, you need to have the conviction, and you need to have the cash to buy that stock. And you have to go out and buy. Now, let's talk about exit. So, at some point of time, you have to book profit as well. And we see that this when the small cap rally comes in, it could be hundreds of percent of rally. Stock goes from 100 rupees to 1,000 rupees. So at what point of time do you really decide to exit? Because I'm again another very question that comes to my mind, that when it's a good company, it's not that you have spotted that company as a good company. There are other fund managers also might have spotted that company as a good company. And when all of you try to sell that company, what happens to the price? Price collapse completely. How do you exit actually from the small cap? That's what.
Right. There are several reasons why I would exit the stock. So, like, if you bought one stock, you expected it to behave in certain way, it behaved in certain way, and then on the way up, it becomes too expensive. So, if you feel that
Correct.
at this particular price, the risk reward is not favorable, and like if you hold it at this level, you sometimes you can lose permanent capital. So then we sell completely. But there are some companies where we feel that while the stock price may have become expensive in the short term, in the long term it can still do very well. So while we may be aware that stock price can fall by 30% in the interim, in small cap we may not want to take advantage of every like market rise, or
Market
right?
rise.
Because some company which you want to hold for say next 10 years, like,
Mhm.
and there are some companies in our portfolio which you have been holding for last 10, 11 years. So you can imagine, last, if you're holding some company for 10, 11 years, there will be at least 3 or 4 occasions where it would have fallen by 30, 40% in the interim. So
Correct.
many times you don't want. So unless we feel that stock price has reached at such a high level, uh, from which there is a scope for like reasonable capital loss. At the time we exit completely. Otherwise we may
Makes
book
the
some
reward.
profit, and we may want to buy back again at lower level. The second time we sell, like, see, there are not all the sectors where you can do long term investing. For example, there are some sectors like if you're playing
Hmm.
say commodity, some metal. So metal stocks you have to do in and out. This is not a sector where you can do real long term investing. So there you have to exit. So there we try and play through liquid names, so that whenever our view changes, we are able to exit. Whenever we bought for some reason and that purpose is achieved, we sell. So there are some sectors where we have to trade. So again, there are some sectors. For example, construction as a sector is an example. So there, we have seen historically that it's not a sector where you can do long term investing. You have to do in and out. So you have to buy cheap, and when it becomes a reasonably priced, you have to sell, kind of. So
Mhm.
basically, and I think most important thing is, like, if we get any governance flag in any
Mhm.
company. So basically, as I mentioned earlier, we want to get associated with the right kind of people. So once we bought, we realized that the kind of governance standard we were expecting, it's not finally turning out to be, or whatever view we had on management, it's not
Mhm.
turning out to be the same. So then I think then there is no scope for compromise. Then you have to sell, because I think in investing, I think the most important thing, one of the most important thing is to recognize your mistake early enough and take a corrective action. Because what we have seen is mistakes take more time. Because when
Mhm.
you made mistake, stock prices are down, you're meeting companies more often, you're trying to justify. So amount of time mistake takes, that takes time away. At the same time you could have utilized to find, bigger, another big winner, kind of. So you're wasting that in like some of the calls which have gone wrong. So you have to identify those kind of calls which have gone wrong, and you have to exit. So exit is of course tricky in small cap, because you cannot buy when you want, as I explained earlier. Similarly, you cannot sell when you want. So basically, you have to leave something on table whenever you want to sell. Suppose
Mhm.
you have made up your mind that you have, like, this company is coming to a price, going to a price zone where where you don't want to hold, kind of. I mean, it
Mhm.
can go up by 10, 15%, say. So you have to leave something on table for the person who wants to buy. You cannot wait till you reach that final price, kind of, because otherwise you
Mhm.
won't get enough volume. So I think both buying and selling are tricky in small cap.
Correct. Correct. Absolutely. Now, of course, the fund that you are managing, uh, they've really given very good return in all different time frames, in different parameters. Now, coming to the point of selecting the right small cap fund, what are the factors that need to be taken into account? Is it the past performance? Is, of course, it's a very important factor. What are the other factors a small cap investors should look to select his small cap fund?
Right. So I think, while return is the most important factor, I think it's also
Mhm.
important to understand the amount of risk which was taken to deliver that kind of return. So I
Correct.
think, looking at a risk-adjusted return is a very important way of looking
Mhm.
at it. And also, so basically, you see, one will have to also look, like, say, if your return is just coming from one or two stocks, maybe that's not a great portfolio, kind of. Your return should be coming from many stocks. So then it's much more better risk adjusted. So I think that's one of the most
Yes.
crucial factor. And also, I think, since it is a long-term category, I think it's very important that fund you selected also, because this is a category which is for the long term investors. So fund manager also should be seen taking those long term calls, kind of. So I think these are the two most important things which one
Mhm.
should keep an eye on, I guess.
Okay, you something very important. You said whether the performances come from few stocks or broader number of stocks, right? It's
Yeah.
better if it comes from a broader number of
Yeah, so it's
stocks.
much better risk adjusted return, right?
Return, right? So how do you look at that? What are the things that you look at that to understand? We know that there are Sharps ratio or some other Tyranor
Yeah.
or some other ratios are there. And can you throw some lights into it?
So frankly, we don't use, because see, I think these ratios are outcome of what we do. So we
Okay, yeah.
don't try and do something so that these ratios become better,
Huh.
kind of. So these ratios are end result of the work which we have done, kind of. So not necessarily something which we control it in active manner, kind of. So frankly, we don't pay too much attention, because small cap is any case very complex category, and we don't want to add further complexity by adding all these parameters. Otherwise life becomes very difficult.
So keep it simple.
Yeah.
Okay, great, great, wonderful. Appreciate that. Now again, as you said, this is a complex category. It's a category which involves risk, and of course. So ideally, what should be the percentage of one's portfolio devoted to small cap?
Right.
And,
So
and of
see, yeah. So if you look at overall market cap of India, and try and calculate percentage of small cap companies, so small cap companies are roughly about 15 to 16% of overall market cap of India,
right.
kind of. So what we feel, that person with average risk profile should have roughly about uh, like 15% of his money.
Hmm.
Then depending on
Hmm.
one's risk profile and the timing of the market, suppose if you get a COVID like opportunity where small caps
Hmm.
were
Hmm.
completely available at really rock bottom valuation, and if you have risk appetite
Hmm.
at the time, maybe during those times you can have higher allocation. But at no point of time you should put all your eggs in small cap, because small cap tends to be very volatile category. So put only that much money. So if anything goes wrong in the world or in the market, I mean small cap will be the first casualty,
Hmm.
kind of. So basically, you have to be mentally ready that tomorrow, like within say 45 days, your NAVs can come down at a time by 50%. So you put
Hmm.
only that much money where you can see 50% fall, and still you don't lose your sleep,
Hmm.
kind of. So that is a simple way of assessing the risk profile. So if you lose your sleep, so just imagine, like, somebody has put 50% of his net worth in small cap, and it turns out to be unlucky, and for some reason something goes wrong in the world, and like stock price start falling, and he sees 50% fall in his NAV, he
Hmm.
loses 25% on his overall capital, whereas somebody has put 15% of his capital in small cap. Even if he sees 50% fall in NAV on his overall capital, he would have lost 7.5%. So I think
Absolutely.
anybody investing in market, he's used to that, seeing that kind of falls. At least 8-10% fall. Anybody, I think, who is coming to stock market is aware that that kind of fall. So basically, understand your risk profile properly, and just invest that much money that tomorrow, if for any reason, like anyways come down by 50%, you should not lose your sleep over it, because then what will happen, you will end up panicking virtually at the time which is the best time to buy. As I explained, the best time to buy is when there's a panic on the street, when there's a blood on the street, and if you lost 25% of your coppers, you may end up panicking, and may end up selling at the wrong time. So just invest that much with which you can slip by seeing 50% falling in NAV. So that's very important, because otherwise you will end up panicking in the wrong time, and then you won't be able to see the bounce back and the recovery. So I think it's very important thing to keep in mind.
Correct. No, yeah, yes, correct. Now again, of course, the best time to buy is again when the blood on the street, and of course, all the stock, large cap, mid caps are also equally. I think they are collapse when the event comes. But and do you mean to say that while it recovers, the small cap tends to recover faster and bigger than the mid cap and the small cap?
Chances are very high, because small cap, what happens, it falls on very low volume,
Mm,
kind of.
oh, mm,
So it can recover very fast on low volumes, kind of. So normally, during I think the turnaround phase or the bounce back phase of the market, maybe while in the initial phase, first it starts with large cap, maybe small
mm,
caps could be a little late in responding. But whenever
mm,
the rally becomes very obvious,
mm.
in all upside rallies, small caps tend to do better in most of the cases.
Mm. Okay, great, great. So, Samir, another follow-up question is, of course, we need to have around 15, depending on the risk profile, 15, 10 to 15 or 20% of our asset that need to be allocated to small cap. Now, how many funds should be there? Like when you go into we do research for ourselves and try to find out where there are multiple, feel like buying this, that, different funds. So ideally, how many number of funds should be there? And I have seen portfolios of many investors. They have got multiple five, six different small cap funds, by different AMCs. So should it be an ideal practice, or they should focus on one or two or max to max three? Can you give a kind of a guidance?
See, I'm a man of diversification, so I have 170 stocks in my portfolio. So I would want
Ah,
also investor that don't invest all your money in one small cap fund. Even within your fund, you're diversified depending on your comfort and your risk profile. But I think it may not be good idea. I mean, but after having 170 stocks in my portfolio, I cannot advocate that you invest in just two funds,
mhm.
right?
Okay. So again, viewers, if you have got any kind of questions in your mind, please feel free. Go ahead and type your questions in the chat box. Okay. Now, my next question to you is we often see funds returns vis-a-vis benchmark return, right? As an investor, what is the right way to compare the fund's performance with the benchmark?
So this is, I think, very important. So see, because investors while investing in mutual fund, they are paying fees, right? So by paying fees, they at least expect that you're able to get higher return than the benchmark. Otherwise, they have option of investing in index fund or ETFs, kind of. So I think that's a bare minimum expectation which an investor can have, that the fund manager will be over a period of time, over a period will be able to beat the benchmark. So I think that's a perfect expectation to have, kind of. So that's a perfect and bare minimum expectation which investor can have.
ओके नाउ और एक मतलब वन मोर थिंग बार बार हम लोग सुनते रहते हैं कि स्मॉल कैप फंड्स इस तरीके का सिलेक्ट करना चाहिए जिसका एयूएम थोड़ा स्मॉल हो बिकॉज but many a times we have seen in your case also your AUM is not that small but still you're performing right performing well so is it to what extent this statement is true and is it one of the criteria in fund selection?
So, see, basically, generally, the general perception in the market is that concentrated portfolios are good and diversified portfolios are average. Because whenever somebody is running a concentrated portfolio, the fund manager is taking active call and like he's expressing his views. But in small cap, what is my personal experience is that diversification is a virtue,
Mm,
because what happens that diversification gives you ability to hold stock for a longer period of time.
mm,
Kind of. So, the real idea of investing in small cap is that you want to give it a time, and over a period of time, you want to see multiplier money. So you have to give it a time. But just
correct.
imagine, some fund manager like has invested, very concentratedly in a small cap. Kind of say he's put 5% of his corpus in one particular stock. Now that stocks, he would have bought for next 20 years. But if you have say five and you want to hold for very long period of time, but when you hold some really high percentage like 5%, then you have to bother about each 30%, 40% fall, and you would be expected to respond. So if I'm having one stock as a 5% of my portfolio and expecting it to fall by 30%, just one stock can take away 150 basis point of return, right? So then I would be expected to respond to every rise and fall in the market. So in the process, what happens when you try and respond, you may lose some good position.
Correct.
You bought some stock, but you just because you expect stock price to fall by 25% into 30% in anything, you sold it. Maybe very happy. Stock price also falls by that much percentage. And after it falls by 30%, you go to your dealing team and you say, you buy back whatever you sold. So he may tell you that there is no seller available today. So you may not be able to buy back. So
Mm,
basically, a diversified portfolio gives you ability to think for the longer period of time. And then also, it's not that small cap each and every stock which you buy will do well. For some reason, sometimes stocks fall. Like there are many examples in our portfolio where after we would have bought, stock price would have fallen by 80-90%.
correct.
So again, just imagine, if fund manager invested 5% of his corpus in one particular stock, and for some reason it falls by 90%. In one stock, he would lose 450 basis point of return. So then he has to panic and he has to respond,
Mm,
right? But say some fund manager has 1.5% uh, in one particular stock, kind of.
mm,
So maybe temporarily something is going wrong and stock price falls by 80%. So he won't lose a slip because he's having diversified portfolio. And there are some other stocks in the portfolio which are doing well at the time. So basically it gives you time,
mm,
kind of. So it gives you ability to hold stock for a longer period of time. So I
mm.
think having a very well diversified portfolio has its own virtue, and being one of the largest fund in this category, we get that ability to diversify. So that's one of the significant advantage. The
Mm.
disadvantage is that you cannot really maneuver your portfolio too much because
Right.
1% of the fund, if you're running 20,000 crore fund, 1% of the fund is 200 crore. And to do buying and selling worth of 200 crore in one particular small cap stock is not a joke. So you
Mm.
cannot maneuver that much. So if somebody is looking for, that some fund manager will do extraordinary job, will churn the portfolio and he'll create that significant alpha and all that, if that is
Mm.
his call, so that kind of choice is available. So basically, uh, I think I think both funds can have different style of investing. A concentrated portfolio can have different style of investing. Like a larger fund can have a much more diversified style of investing. So both has its advantages, disadvantages. So again, it's again a choice of investor, kind
Mhm.
of. So maybe I think the best solution to that is that maybe you give it to both and like diversify your risks within that
Right.
kind of. So again, it's a choice, individual choice, but I think it may not make sense to give all your money in small cap just to one fund manager.
Okay. ठीक है. I've got a questions from someone who has been whose name is Knowledge Market Life. Anyway, he said, "Sir, I have 18 mutual fund categories. We have 18 mutual fund categories: five small, three large, and two flexi cap, two um, MIS cap. What is this? Okay, and few others. Should I go with the same portfolio or change it? Okay, so let me read it out again. Sir, I have 18 mutual fund categories, five in small category, three in large, and two in flexi, and two in another. Okay, the few others and a few others. Should I go with the same portfolio or we should change, restructure the portfolio?
So I think it's going to be difficult. I mean, I'm not understood, to be very frank, question properly. So
Okay,
basically,
so
I think this gentleman seems to be like advisor, and I think he's advising his clients to diversify his portfolio within those 18 schemes. Like if I understood that question correctly. So, so whether I think he's trying to understand whether he should have it at 18 or he should have lesser number or he should have more number, kind of. So again, I think there is no one answer for that. It's again very individual choice. So I think you should give option to your clients, and like if clients risk profile is of certain and his nature is of certain, like you can maybe out of this 18 you can offer him 9 scheme, or somebody really wants to play a diversified, you can ask him to diversify it, along all these 18 schemes. So
mhm.
I hope I understood question correctly and replied it correctly.
Yeah, you meant to say he has got mutual funds in his 18. Again, I have 18 mutual fund categories. Okay. 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 Let's go ahead and so I'd like to request the viewers that if you want to restructure the question and post it, you can. Would like to take it up again. Okay. So now again coming back to another, because you have been into the research of small cap, mid cap for very long, long period of time, and you have seen how the transformation of a small mid cap company into a very large cap, huge company, right? So, which sector do you think the maximum this thing has happened? Which particular sectors? There many sectors are there where the probability is higher that the small cap company could grow into a mid and large cap companies in the future, or you have seen it.
Right. So see, if you look at our current portfolio, we are significantly overweight on the capital goods sector. So
Hmm.
we are very excited about that sector because the quality of companies in the sectors are very good. Uh, Secondly, we see capex cycle in India is clearly on the picking up kind of. So I think all these companies will benefit out of this. And third thing which we are seeing is many companies yeah, out of Europe or out of USA, they want to reduce the dependence on China, and they want to look at other countries. And India emerges as one of the top choice because we have very large domestic market also, kind of.
Correct.
So we feel there is a good underlying trend, and most of these companies, they are like very good balance sheet, they're good cash generating companies, excellent management, they have more. So I think this sector, we are very hopeful that this is one sector which will do well. Secondly, I think government of India very rightly encouraging many sectors where India has a large import bills, or which could be a large export item. So through a lot of PLIs. So I
Mhm.
think some of these sectors which where PLI is offered, I think they have very huge potential kind of for growth. So I think this is again segment which is a lot of interest to us. So be it like electronic manufacturing, be it textiles, or be it some of the like engineering companies. So I think there are interesting themes which are emerging in that space also.
Okay. So there's a question from Mr. Gautam Acharya. He said, I am new to this mutual fund. Can you suggest in which mutual fund I should invest, sir?
So, I mean, I'm not a right person perhaps to advise on any particular mutual fund, kind of,
You
but
can give
my
a broad outline,
yeah.
kind
So
of.
my general advice to you is that I think you finally you made a good decision to invest in mutual fund,
Mhm.
because we are in an era which is very inflationary, uh, overall a very inflationary environment, and historically we have seen that equity is the best way to beat inflation. So you made a correct decision, and I'm sure there are many advisors which are there, which are in a position to advise. So currently, I'm not allowed to give advice like this in a public forum on which fund to pick up or which particular scheme to invest.
Yeah. I would like to tell Mr. Gautam that the mutual fund industry is extremely highly regulated by SEBI and all. And so, yes, you can always talk to your investment advisors. You can talk to, and they are going to give you how to start your investment journey, with what kind of fund categories that you can choose. And it's good thing, as Sir have said, Samir have said, that yes, you have started at your journey in a mutual fund. Now, next question is like funds. When you talk about downside risk, we know that the fear is that downside when the market starts correcting, when we see that our all profits, gets into slowly negative. So, is there any way to find out the downside risk in a fund when we invest?
Downside risk in a fund. So basically, risk comes from there are various kind of risk of investing in small cap kind of. So there's a volatility risk, right? So volatility risk means that this can be very volatile category. So basically, then that particular risk has to be addressed by investors by allocating how much percentage of his overall portfolio he wants to allocate to the small cap. So then there is a liquidity risk which fund manager has to manage, because most of the small cap funds are open-ended fund. So there could be redemption at a point of time. So we have to make sure that there is enough liquidity available. So we always keep certain level of cash. We also invest certain portion of money in large caps, so that if tomorrow there is some unforeseen event and if there is some redemption pressure, we should be able to meet those kind of pressures through. So there is a liquidity risk. Then there is a stock specific risk. So that stock specific risk, I think what fund managers they can do is by diversifying their portfolio, so that even if a couple of ideas fail, so see, fund managers, out of any 10 calls which you're going to take, like 3 or 4 can go wrong. There is nobody in the stock market which can get each and every call right. So you have to just make sure that if there is a mistake which you made, it doesn't should not happen that mistakes should take away like your entire chance to stay in the game. So so fund managers should diversify the portfolio enough so that if a couple of ideas goes wrong, it's not out of the game. So there are various risks and various downsides. So you have to, I think, keep on monitoring that how fund manager is like navigating through all those risks, and depending on how you feel about how he's doing his job, you can like take care of downside risk in a particular fund.
Right. Okay. So, Mr. Knowledge, he has reposted his question. So he is asking. Actually, I mean, sir, I invest 18,000. Yeah, 18,000 in 18 mutual funds, 1,000 in each. So he have got 18 mutual funds. I have a small cap, mid cap, large cap, and flexi cap also. Should I reduce it to lesser number, or remain as it is? Yeah. So number of funds and the categories, should we reduce it, or it should be as it is?
I think again it's a very very individual question. So first of all, I don't know which are the schemes which you have in your portfolio. So maybe what I can give you very general advice, that within like each and every category you like monitor how your fund managers are doing, and if you feel that like some fund manager or some fund house is not giving you the kind of experience which you're looking forward, so maybe it makes sense to perhaps switch from those kind of funds to some other fund which where you feel you're getting better experience, and thereby reduce the number of stock. I think 18 seems to be generally a little larger number. Maybe there's some scope for you to rationalize that.
Yeah. I think fund managers role is extremely critical here, right? Is it mostly process driven, or the fund manager has got a great role to play in stock selection, all this kind of things here?
No, see, I think, see, as I say, it's a very research intensive category. So basically, see, when a fund will deliver the return, so a fund to
Mm.
deliver return, first of all, markets have to be good, right? So
Mhm.
markets are in the not hands of the fund manager. The second most important thing is that the companies which you have invested, finally, those money that company has to do, companies also have to do well, right? Then another thing, like fund manager is a single person, he cannot do his job, so he has a large team behind him. So we have a large pool of research analysts, like which are doing their job. So if they don't do job well and they come out with the good ideas, both buy and sell, fund cannot do well. Similarly, if you've done all the hard work and finally you've found an idea which you want, but if your dealing team is not able to execute that idea, again it doesn't work. So I think it's never an individual process. It's always it's entire process which is there behind. So giving credit to, like, all credit to fund manager is like, if a team has won the match, you just give
Your
like
fund
all
manager
credit,
is the captain.
and don't give any credit to person who has batted well or person who has fielded well or person who has bowled well, or like that. So it's never one man thing. It's like entire team behind that. Maybe fund manager is the face of the organization, but is never the only person.
Wonderful. Samir, you have been in this industry for such a long period of time, and I try to get the maximum whatever I can from your experience. So if I have missed you asking some critical things which I should have asked, can you go ahead and tell us?
No, so basically, I think you asked me all tough questions and all the right questions. So, frankly, not too much to add. But what generally I feel, one thing which I've seen in India is actually the maturity of the retail investors. I think that's a discovery which I have seen. So, what I'm seeing today is that retail investors, in terms of behavior, are even mature than many of the seasoned fund managers. So I
Mm,
still remember, like, 10 years from 10 years before from now, whenever there was used to be panic in the market, we used to get a call whether they should redeem the fund.
mm.
And today, I think the maturity of the investor is so much that even if there's a 10-15% fall, we get calls. This is time, right time to put money, and it's very amazing to me. We have had such a negative news flow over the last 1.5 years. Like we had like interest rates which are going up. We had a wars. We had a high level of inflation. Virtually everything could go wrong. Has gone wrong. FIs have sold such a big amount of stocks, but retail investors have just kept their faith and held on. So I think the maturity of the retail investor is something which really amazes me, and I think in terms of behavior, I think they're really thinking long term, and which is very fantastic thing, and which makes me really optimistic about long term prospects of Indian equity markets. So,
Absolutely. I think hats off to all the AMCs, all the mutual fund companies. The amount of effort that you have put in educating our customers in last 10, 20 years is really, really amazing. I'm in this market for quite some time, and at some point of time, people used to say that Indian market is behind American or US market 20, 30 years. But today, I think Indian market is ahead of those Western, advanced countries' markets in terms of compliance, in terms of regulations, in terms of technology. We are so well ahead. We are so matured, and maturity is from every side, not only from investors' side,
absolutely,
from fund management, from regulations, from exchange technology, from everywhere.
I agree. I
And
agree.
yeah, and I think it's a great talking to you, sir. Wonderful talking to you. I'm sure people have learned, got lots of insight, how to choose, how the fund management inside a small cap, the risk kind of involved, return kind of been expected. Of course, there are so many questions are coming, but I think okay, great. People are appreciating your funds, small caps, and that's great. With that, I'd like to close the session. Thank you, Samir. Thank you so much for being a part of this program, and looking forward to have you again in future in our shows. Thank you so much.
No, thank you for having me. It was a real pleasure talking to you. Asked real some wonderful question, and thanks to all your participants. It was great time. Thank you.
Yes, absolutely, and great. Thank you to all our viewers as well. Thank you so much.
Thank you.